Anytime you could recognize the bottom of a box and it's obvious. If it's obvious to you, it's obvious to most of the rest of the world. If it just jumps out, and that's these consolidation lows. Understand the more they work, the less they're going to work. Understand the risk of it finally breaking out, even on a slower day, are greater and greater the more times it tests it. So you get that final move out, and that's a breakout, okay? And they start repricing at lower levels. You want other people who see that it's obvious support to get trapped, and that is what becomes the self-fulfilling prophecy of downside. You have to know after you're long, you are a seller. Well, so are they. If you get more longs than shorts, you could have more sellers than buyers. And that's what's needed for the price of anything to go down. So when I play this, we already recognize where it's risky being long below. And then you see our red and white lasers, which are bullish, turn to green and gray right there. It just went green right there. Now you're already anticipating it could break out and get weak. And then you get green, which is more longs than shorts, and gray, which are more aggressive sellers than buyers, and the delta of those two. So let's play it. Goes green. You got all this aggressive selling over there. Nice long retail stump longs that come in, and they run it. Now it turns back red as they shake out a bunch of longs on this long puke, right? Well, watch it. We always talk about, now I'm drawing those lines, and then you see we always talk about be careful being short, and you want to stay underneath now as it breaks. When it goes red, you want it to go back green so it could rotate up a little bit and then have that continuation. And you want to stay underneath where most of the longs puked. You got red gray. And let's fast forward this. Goes back green in here, dumps. And then once it goes red, it gets choppy to higher, green, red, green, lower, red, choppy. So the point is, you got all these longs that puke. The point is, you have to anticipate where the other side might be in trouble. Right in here, it was green, and we actually popped, but the sellers, or the buyers rather, got anxious at this point. And this isn't really popping. This is just a little sideways trade. And it stays below the middle of the prior box. And then took a while to get back through 64. When we back it up, you want to work on being able to predict what's going to happen next and it not feeling like a good guess. Strip out the randomness, but understanding any of these markets through the prism, through the eyes of other people, other people's position. If you're not able to do that, then it's all about what you think. It's all about your emotions. It's all about getting caught in a personal fast market, we used to call from the floor. You have to take a step back and have to read the room and react.